Good afternoon, James Preston with you on Kalkine TV. It's great to have your company for the Stocks in Action show. Let's have a look at the ASX 200 and the ASX listed stocks that are trending today. Australian shares have touched their highest ever level on Friday, prompting the market to end the week at a new peak. The S&P ASX 200 hit 7,176.8 points shortly before midday, marking a 1.1% gain for the day. Currently, the benchmark index is trading at 7,175.6, up 80.7 points or 1.14%. The top performing stocks in this index are Inghams Group, up 8.76%, and South 32, which is up 5.46%. Over the last 5 days, the index has gained 2.07% and is currently 0.11% off its highest 52-week period. 10 of 11 sectors are higher along with the S&P ASX 200 index. Materials is the best performing sector, gaining 2.3% and 1.79% for the past 5 days. On that note, let us look at a few global and domestic developments. New economic data lifted investors' spirits. Investors were very upbeat after new labour market data showed that jobless claims fell to another record low. And separate economic data backed the earlier GDP projections of a 6.4% annual growth rate in the first quarter of 2021. Jobless claims, a proxy for layoffs, fell to 406,000 last week from 444,000 in the prior week, the Labor Department data has shown. As layoffs subsided, the companies were looking for workers to meet the rising demand unleashed by the reopening of the economy. The fact that jobless claims beat expectations shows that more people are starting to go back to work, supporting the economic recovery as a result. Another report from the Commerce Department on Thursday confirmed economic growth picked up the pace at a 6.4% annualised rate last quarter, owing to the massive fiscal stimulus by the central bank. This was the second fastest GDP growth since the third quarter of 2003. Meanwhile, Senate Republicans have proposed a US $928 billion counteroffer to President Biden's US $1.7 trillion infrastructure bill. House Republicans and Democrats have been wrangling over the bill, central to President Biden's economic reforms. It's still unclear whether they will settle their differences by the Memorial Day deadline set for the bill's assent. Let's return to home soil, and there's some pleasing news from Australia. Business conditions are stable in May for Australia, with 78% of businesses experiencing either no change or an increase in revenue. Most Australian businesses have reported stable trading conditions in May, according to survey results today released by the Australian Bureau of Statistics. The ABS Head of Industry Statistics, John Shepherd, said the latest business conditions and sentiment survey showed that 8% of businesses expected their revenue to fall in June. Some businesses were still recovering from the effects of the COVID-19 pandemic, despite overall improving trends. 43% of businesses reported that their cash on hand could cover 3 months or more of business operations. John Shepherd further said that, quote, conditions such as decreased demand, decreased revenue, and restrictions over the year have impacted cash reserves, end quote. The survey also found that since the end of March, 20% of businesses have stopped accessing support measures, such as wage subsidies, the renegotiation of property rent or lease arrangements, and deferred loan repayments. And now, before we move on to the commodities sector, it's time for a small break right here on Kalkine TV.
At Kalkine TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming, financial and stock market news. Kalkine TV.
Hi, welcome back. Great to have your company. James Preston here with you live from our studios in Kalkine headquarters in Sydney. This is the Buzzing Trend Show. Let's move on to the next news in the commodity space. Australian miners jump with an eye-higher weekly finish as iron ore volatility has eased. As per Refinitiv, on Thursday, Asia's iron ore benchmark rebounded from a more than 6-week low, underpinned by easing concerns about a crackdown on speculative trading in commodities by China. Soft profits by industrial sectors kept worries over policy tightening by China at bay. Iron ore markets have been volatile since China issued warnings about tightening its oversight to cool a blistering rally in the commodity. Australia's Metals and Mining Index, the AXMM, firms up as much as 2.8% and is set for its biggest intraday gain since the 10th of May. It also seems the index is on track to end the week up quite highly, 2% for that matter, after 2 straight weekly losses. The AXMM is at present more than 1 week high. The world's biggest iron ore producer, Rio Tinto, also jumped 4.9% to be the 3rd biggest gainer on Australia's mining benchmark index. Rio's rival, BHP, also advanced 3.4% for its best day in nearly 3 weeks. Fortescue Metals Group is also up by 2.6%. All 3 miners are on their way to notch positive weekly gains. Copper rises on the back of robust US economic data and strike threats in Chile. Copper has now seen a notable jump for its Thursday activity, along with other industrial metals on the back of robust US economic data. Copper futures for July delivery traded at 0.16%, up to US $4.68 per pound on the COMEX as of the 28th of May 2021, 10:49 Australian Eastern Standard Time. Prices of the red metals surged to record highs of US $10,747.50 per tonne earlier this month, before dipping to US $9,795 on Monday. China's move to curb exorbitant commodity prices has weighed the prices of the metal used in the construction and power sector. The current surge in prices is underpinned by an upbeat in the US economic data and also strike threats in Chile, the world's top copper producer. Adding to that, US President Joe Biden's multi-trillion-dollar infrastructure plan has also lent optimism to the copper bulls. Well, on that note, let's have a look at some major news from the ASX listed companies from across sectors. Well, we're going to start with some big news coming from Downer EDI's Keolis. Downer awarded a contract for bus services. Downer EDI announced today that the Keolis Downer joint venture has been awarded a contract valued at 900 million Australian dollars over the next 8 years to operate and maintain bus services on the Sydney's northern beaches. As per the ASX release, Keolis Downer will work closely with Transport for New South Wales to deliver a range of initiatives to further enhance the journey experience of customers across all aspects of the service it provides. The contract will see the introduction of 125 electric buses over the next 8 years, and Keolis Downer will also introduce innovative headway technology. Moving on to the next big piece of news, Freedom Foods has completed a recapitalisation. Freedom Foods Group successfully completed recapitalisation and announced it on the ASX on the 24th of May. Let's have a look at the key highlights. They've secured subordinated convertible notes to be issued to Arrowvest and new convertible note investors today. Allotment is subject to note terms given in prospectus dated 19th of March 2021. And the notes have a 6-year maturity and will be convertible into ordinary shares post receipt of shareholder approval at the company's extraordinary general meeting, which is set to occur on the 25th of May 2021. And now, before we move on to the next piece of news, it's time for a small break right here on Kalkine TV.
At Kalkine TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming, financial and stock market news. Kalkine TV.
Thanks for sticking with us. James Preston with you on Kalkine TV, live from Sydney, and this is the Buzzing Trend Show. Let's move on to the next piece of news, and the ASX listed stock, Tabcorp, is making news today. It surged after BetMakers bid Australian $3.1 billion for its wagering unit. Shares of Australian betting firm Tabcorp Holdings Limited gained 3.65% to Australian $5.245 per share in early trade after it received a proposal from BetMakers Technology Group Limited. Bet, an Australian wagering platform operator, offered $4 billion for Tab's wagering and media business. Bet shares are down 13.438%, or trading at just over 1.38 Australian dollars per share in the early trades. Tab says it has not yet formed a view on the proposal's merits and will be assessing it in the context of the previously announced strategic review. Tab had received bids from British sports betting firm Entain and US-based investment manager Apollo Management for the business. Well, good news for chicken lovers. The rooster isn't cawing, but Inghams certainly is. It sits atop the ASX 200 after revising its financial year outlook. Inghams Group gained up to 10.2% to Australian $3.46 on Friday morning. The poultry producer now sees statutory EBITDA for financial year 21 in a range of Australian 438 to 448 million. The company stated improved outlook was aided by improvement in general trading conditions, with a decline in the impact of COVID-19 restrictions over the past 6 months. Ingham has also upgraded its financial 2021 year status, NPAT on the range of Australian 80 million to around 87 million. And meanwhile, this ASX listed stock is also in the news today. Link administration jumps to over $2.3 billion offer from majority-owned realty PEXA. Link administration gained 4.2% to Australian $5.41 in early trade on Friday. The company stated it has got an offer for $2.3 billion US or Australian $3 billion from private equity giant KKR & Co. for majority-owned online real estate platform PEXA. As per the ASX release, property classifieds operator Domain Holdings Australia also eyes a stake in the prized firm and will join a consortium looking to acquire a 10% stake in PEXA. KKR, in its announcement, has said it expected to partner with Domain. Domain, however, did not name who will comprise the consortium. About 256,500 shares of LNK have traded within 10 minutes, about 12% of their 30-day moving average volume. All right, well, that is all we have for now. Make sure to stay tuned to Kalkine TV for more live updates, though. We'll be back with more news on markets, economy, and diverse themes and sector shortly. I'm James Preston for Kalkine TV.